This conference will now be recorded.
Good evening, ladies and gentlemen, and thank you very much for being with me. My name is John Needham. I'm your host for today. And what a lot of news we've got to talk to you about. First of all, may I say good morning to our friends in the land down under. And I think it's early good afternoon to our friends across the ditch in the land of the long white cloud. So great to have you all with me. Thank you very much. We've got all our usual registers here, regulars I should say, and a few newbies as well, which is always a delight. I want to start off, if I may, by thanking Terry, who's our IT guru, and that's his caper. He's an IT expert, but he's also a very skilled graphic artist, and he creates these wonderful banners for us. And if you take a look at the one that's on your screen now, and you look between the letter M and the W, you can see a young man hidden in there, looking intently at the graph, which has now miraculously appeared on the footpath going through this magnificent forest. So thank you, Terry. That's very, very well done indeed. I enjoyed that. Okay, so much to talk about, folks. It's a busy day. Let's move on. As you know, markets are rational, orderly, and sometimes predictable, and the Daniel Code is a set of proprietary ratios that control time and price in all markets. Today, we're mainly going to talk about creating and trading Daniel Code time signals. Now, that's the best trading system I know. It's only available through the Daniel Code tutorial, but we have a new announcement about all of that today. And we're particularly honored to have Justin with us again. Some of you who are regular attendees will remember Justin. He's a Daniel Code member. He did a Daniel Code tutorial a number of years ago, and he may have done more than one from memory. But he's had what started off as a difficult relationship with creating Daniel Code time and price signals. And I can remember at some stage he told us in his earlier recordings that one of his difficulties was that in reading some of our material, or perhaps listening to people, I don't quite recall the detail, this is some years ago, he heard the word gospel, or it might have been parables, or it might have been some other word with religious connotations. And he had a very modern man's reaction. He said, "The hell with this, I don't want anything to do with it." And fortunately, his father, Hank, who's a wonderful man, who'd been a member of the Daniel Code longer than his son, asked him to keep at it. He said, "I've seen Needham's trading and you really should stick at this." And he did. And I suspect sotto voce that he has been trying to find a way to find the weak points in the Daniel Code time trading signal, maybe even looking to see if he could break it. And he's done that with some absolutely massive research, as you will see when we talk to him somewhere just past the top of the hour, probably, Justin. Thank you for being with us, my friend. And the research that Justin's done, it's incredible. It's mind-boggling. And you'll hear him talk about 100 years, in fact, over 100 years of research. And what he means by that is he's traded a huge variety of markets, every market in the futures lexicon that you can think of. And he's traded them for various periods, some of a year, some of them 2 or 3 years, some of them 6 or 7 years. But in total, he's researched over 100 trading years of data, which is pretty extraordinary. And I think that adds some serious weight to our knowledge bank, for which, of course, we're grateful, particularly that Justin is prepared to share this massive body of work with you. with all of us, and I'm most grateful for that. Anyway, moving on, let's see what this is about. During the week, I wanted to be very sure that you understood where we were with these various equity markets. And it's this document is dated the 17th. In fact, this was done on the afternoon of the 15th, before the bar on the 16th. And I wanted to just make you aware that the S&P and NASDAQ, even though they're out of sync a little bit, they were trying to make a top, which is why I put this post up. And I also added another TO3 sell signal for the S&P. It was actually on the second or third day of a blue line signal, which are valid for 3 days, including the day of posting. But I just threw in another daily signal to make sure you got the message that this was likely to be a move that you didn't want to miss. So I also popped in there a chart of gold, which has had a wonderful run up and down, and soon you'll see how our recent trading has been wonderful. So things to talk about: new research from Justin on creating and trading Danielcode time signals. Our new Teach Yourself to Trade, new video training sessions. These will be available from Monday. I pretty well completed my work with Terry to be fitted into the website and what have you. We are ceasing coverage of the algorithm program. It's been really interesting. It's shown us the benefit of that program on trending markets. It's quite sensational how well it's able to hold on to all the trades. But I don't think many of you are using it, and I don't think it's really so helpful to the day-to-day business of trading and making money. If I'm wrong, if there are any of you who are actively trading our algorithm program and would like to keep it, email me and tell me which market you're interested in, and I will be able to see if I can assist you. What I'm going to do with that space, the space that says algos, you are going to find that I'm going to replace that with flip me signals for futures and forex. I'm going to talk more about that in that space. Terry will rename it on Monday. It'll have some signals in there, and I'm going to post in there the markets that have set themselves up for a flip me signal. Now, flip me signals, basically all Danielcode trade signals have an entry point and a failure point, which is where your protective stop goes. And those signals are basically so powerful that if that failure point is breached within 3 days, not counting inside bars, it's telling you that you're wrong. And if you're wrong, you need to do something about it. You need to get right. And that's what flip me is. It's the point at which signals will fail. So you can look at those every day, just write them down, be aware of them. And if the failure point is reached, act accordingly. So we're going to also show you a couple of new ideas about momentum turns, momentum trade signals, and duality. Duality simply means two of. And it's interesting with these momentum signals. You would expect them to be strong follow-through signals, and some of them are, but the majority of them lead to very soon reversals, prompt reversals, in fact. So I want to show you that and have you think a bit about it. And I'm also going to show you a look at a new version of zero balance. Now, zero balance was all the rage 30, maybe 35 years ago. And what it looked at, this is of course before the days of all this computerized stuff that we use now. It was an attempt by traders to find the length of a mood. So you could have an overbalance in time or an overbalance in price, meaning the market had gone one way further than the other and was likely to try to return to a neutral position, which they called zero balance. And Some of that technique is still used today. A lot of big institutional traders will use a version of zero balance to determine their get out or failure point. This new version that I've created uses two separate momentum measures, and it actually creates buy and sell signals. To my eye, they come a little bit late. They're nothing like as fast as we could have with our Danielcode time signal. That's a fact. But they may be really, really useful as a tool to look at opportune times to hold on to your trades a bit longer. Okay, so as I say, we're privileged to have Justin from the Hunter Valley with us. He lives down there in New South Wales, and the Hunter Valley is a bit like your Keeneland. It's where all the thoroughbred horse studs are, where the great horses are bred. And the grass is so green you could eat it yourself. And I had an email from Justin earlier this week saying, I'm getting close to finishing this batch, and the results so far are very similar to the results I've been getting in the past. The NASDAQ and T-bonds in particular have been going quite well. Well, Justin is absolutely the absolute master of understatement because, as you'd be aware, excuse me, if you got 30% in any year, that'd be Citadel. You'd be the best hedge fund in the world, wouldn't you? But he goes on to say, overall, I'm averaging around 600% on margin, with the range of all the results being 150 to over 1500, with still no losing years in any market, not even close. Now, I've capitalized out, put a bold on that. Pretty nice, isn't it? He says you can work with that. So he'll be speaking, as I say, a bit after the top of the hour. Wonderful stuff. So let's have a look how we've been going this week. This is the S&P. Lovely bit of trading for us. As you can see, the TO3 sell signal, which came, that high, of course, is Tuesday's bar. And I put the post in on Monday that we were sitting inside a TO3 blue line signal as well. But I know that not all of you get the blue line signal, so I popped in an extra daily TO3 just to make sure you all got it. And that's been a nice bit of a trade for us. Straight down 3 days, little rally. We got the rally as well as the sell, as well as back into the sell. In other words, we got the lot, which was very encouraging. Now, I want you to particularly think about this pattern that you're seeing on this market of the correction, followed by a really big expansive bar. You can see coming out of that correction, you've got the biggest bar on the chart. This is a momentum trade. This is the sort of thing that I'm going to be talking to you about a bit later, but show you ways to identify that faster. This is the NASDAQ, which has followed suit. You can see the same thing. It had a TO3 and a blue line sell signal right exactly at the blue line. Pretty amazing stuff. You consider that blue line's been on there for weeks and weeks and weeks. Wonderful stuff. And that trade down, up, down, two little corrections, you should have got some part of 34,000. It's a big market, this, isn't it? That's a whole lot of money. And look where that market closed today. Really, really interesting stuff. That close was actually on a blue line itself, but the low was at 18883. 18883. Where's your number there? 18869. The low was 1883. 69. What am I looking at? Must be the wrong number here. Oh, the close. I see. The close is what we were talking about. 18992. There's your number against it. 18982. Pretty fantastic stuff, isn't it? And that might hold this market up for a day or two. It will be interesting to see. As you all know, Friday's the most bullish day in equity markets. Okay, Russell. This one has really been out of sync, hasn't he? He had over a month and a half of consolidation, just going absolutely nowhere. Then all of a sudden, this roaring push up as I said, Russell behaving like a bull market, and he got his high there, and he's been consolidating. He's just not following up with the other equities. So we've got a fair bit of divergence between the small caps and the S&P and Nasdaq Dow, and it's been that way for a while, but it's been the other way. It's been the big boys really, really bullish, hugely optimistic, and the Russell being a laggard. You can see that long consolidation we had down there, and it's now absolutely flipped that over. Interesting. Here's the trade in gold. Same thing. We had a TO3 and a blue line sell signal right at the high. Down it came. Counter trend. Big momentum bar leading down to the first move down. Big long momentum bar down. That was the momentum bar that you're going to see later on. Little rally and then another decent sized bar down, but not as much momentum on the way down. Here's copper. We had a TO3 sell signal right at the high. It's had just two little counter trends, so you should have earned something, some part of 11,800 out of that. This is natural gas. One of the really interesting things, isn't it, folks, about these commodities, natural gas, grains, we know coffee and cocoa trend like mad, but they're on the different exchange. So I don't cover coffee for you anymore, but it is a wonderful trading market. But this natural gas, when it trends, it really trends. And it can be a wild market, but it's a great trading market. This move down from our TO3 and blue line sell signal is some part of $8,000. Wonderful stuff. Now, Teach Yourself to Trade. This is our new program, and this goes on as an adjunct to our existing Learn to Trade. I know they sound together, they sound the same thing, they're in fact very different. Our aim is always to make you safe and very profitable traders of futures and Forex. And to this end, we have two quite separate streams for you. First, the Danielcode trading tutorial. This is our celebrated trading tutorial that's delivered over 6 or more sessions, each less than 2 hours. This is an always in the market trading system, and it's all done one-on-one with me, and we use GoTo as a video conferencing system, which is the part of the same conference that we're using for the webinar today. Our trading tutorial uses Trade Navigator charts and software, but we have our proprietary studies embedded in there, which come to you as part of the Learn to Trade tutorial. And my fee for this is $7,500. This is a very, very intense tutorial. You will have 5 or 6 lessons of less than 2 hours, as I say, all one-on-one with me. And from then on, I will be asking you to do paper trading, quite extensive paper trading, and we will be going through that paper trading with you bar by bar, trade by trade. In other words, I'll get you to the stage that your mind is completely fixated on the creating and trading these time signals. This is, you've heard me say it before, the best trading system I've ever seen or heard of. It is something I invented entirely. It has no bearing or usage for anything else other than in the absolute simplest form. We use a stochastic. There are many other things we could have used for qualify some of our stop loss positions. But apart from that, it's all totally unique and different. And we've now today announcing our new program, which is called Teach Yourself Trading. And what that is a series of videos that I've dictated or created. And you can you just buy these videos at a much, much lower price point, of course, a fraction of the price, and teach yourself to trade from these videos. And it contains all of the important material that you would learn in the full Danielcode tutorial, which we call Masterclass. And of course, um, I'm not going to pretend that these are ever going to be as good as Masterclass. Why is that? Well, if you're doing the full tutorial, if you can afford it, you should do it. If you have aspirations to be an elite trader, it'll make you there very quickly. But in that process, you will have 8, 10, 12, maybe more hours with me going through charts, looking at charts, talking about charts. Have a look at that particular trade. Was there an alternative? Is there some subtlety that you can get from it? In other words, the background of my over 35 years of trading and the best part of since 2004, that makes the need 20, doesn't it, of teaching trading. I impart that to you during our ongoing discussions when you're doing masterclass. With these videos, they've got all the important material in them. There's nothing there left out. And I've set them out in the order that I suggest you do them. Now, of course, it's your money, you can do exactly what you want. But I've suggested that you follow this order. In some cases, I will tell you as we go along that you really, really need to do that uh, um, recording before the later one. So lesson 1 is finding Daniel's code and creating the time ratios that rule all markets. Cost $6.99. This lesson, you're going to discover, first of all, the fabled rule of eights, which is a bastion of stock markets until decimalization. In fact, the LCBOT market, US T-bonds, soybean, grains, they still trade today on the rule of eights. And Gann used the rule of eights, but he never knew where the rule of eights came from. You will discover where the rule of eights came from and how it's created. And as I say, these are things which on first glance appear to be random numbers, but you'll find on closer examination they are not random at all. And I think it's important that you do this first lesson for the reason that what you learn here with the time ratios and the validity of this whole approach to Danielcode, which is proved simply mathematically, uh, is vital, because one of the very few things that we all agree on today is mathematics. Everywhere in the world, in any culture, any political party, um, any color of your skin, any religion, any culture, everyone says that 2 and 2 equals 4. They know that as a certainty. And that's why I call mathematics God's language. It's the only thing virtually that I could think of that everyone agrees on. So Danielcode is actually a mathematic-based study. And the better you understand that, the better you'll be able to grasp what comes next. So lesson 2, creating and trading price signals. That's an hour long. These are all about an hour long, these videos. $6.99. It will show you how to take the Danielcode price signals, convert them into time, which means we now have what we talk about here often as target recognition. This is the most essential precursor to all market turns. Markets really don't turn without target recognition. Now, I should not use an expression like don't or always. I will say rarely, because everything we do in markets is based on probabilities. There are no certainties in markets, but I can tell you that the probabilities of a turn without target recognition are slight, very small indeed. And some of the material in there you can build yourself. You can recreate the Danielcode retracement tool on any program. For this particular trading price, if you want to use the Danielcode blue lines, you're going to need members charts, which you can access on your free trial, or you can subscribe to them for a small fee. And those blue lines, I don't teach how to create them, because honestly, if you were creating the blue lines, you wouldn't be trading. It's so time involved and so time demanding that you can't do it and be an effective trader as well. So the simplest way, if you want to use the blue lines, um, just get them from the Danielcode members chart. This lesson 3, teach yourself to trade trends and trading tricks. There's a lot of material in here. It combines bits and pieces of market law that you need to know to beat the markets. As an example, do you know the difference between a swing high and a momentum high? And the closing high, for example? Well, you need to know that stuff. This particular lesson, I think, is vital. Whatever you wish to go on to, whether you want to go on to trade price, and particularly if you want to go on and trade the time signals, it is vital that you understand this stuff that's in this lesson here. It's also available less than an hour, $6.99. Lesson 4, this is the big one. Learn to create and trade Danielcode time signals. Learn how time is stronger than price. In this lesson, you'll learn about the minor time, which you already discovered in lesson 1. It's the vibration of all markets. You will learn what our super traders have been using. When you hear members on this program talking about 500, 600% ROI and more, this is what they're using. It is the outstanding trade program of our time. It is safe as well as incredibly profitable. Your maximum risk is a fraction of margin, just a fraction of margin. And Justin is going to tell you shortly that in his research and back testing of Danielcode time signals, he's traded 14 Forex pairs, and he tells you in there exactly what the results are. So we tend to talk more about futures, but I actually started off as a Forex trader. Greg Palladini, who's with us today. Greg's a wealth manager and super trader in California. He too started off as a Forex trader, and when he'd done the Danielcode time trading tutorial, he switched to mainly being a futures trader. So lesson 5, I'm hoping you won't need this, but I've put it in. It's just a 1-hour session with me that will tie up any loose ends if it's just not working for you. Don't flounder around and get frustrated with things. If you can't understand what the tutorials taught you, or you're having trouble applying it, you can have a 1-hour session with me. I'm hoping that won't be necessary. The whole purpose of making this particular program available at a fraction, not much more than 20-30% of my normal fee, is because it won't involve my time, which means I can get on and do so many other things which are all important. So to access the, and I've set it out there, you can book your trading session between 8:30 p.m. US Eastern Time and 4 a.m. US Eastern Time for $4.99. To access the Danielcode video training lessons, you must be a Danielcode member. Membership is free. Email me, jneedham@thedanielcode.com, with the lesson you would like, and we will send you the invoice. Once paid, the relevant video will appear under your Danielcode members page, and it can be viewed there as often as you like. For those of you who do one or more of these video tutorials and then realize you'd like to do the full Danielcode trading tutorial masterclass, all fees paid for this particular version will be credited towards the fee for the major program. So, ladies and gentlemen, we are extremely privileged to have Justin with us today. And Justin, you will remember, has already done a couple of interviews with us, and he's an amazing, quite incredible worker. And he's doing his Danielcode tutorial, and he's really digging into the value of everything that is in Danielcode time trading. It's an extraordinary journey he's on. Justin's been a Danielcode member for a long time, many years. His father Hank's been a member for even longer, and they're both delightful people. Justin's done tutorials with us over the years at Waiheke Island and other places. If you don't know about Waiheke Island, folks, another name for it is Paradise. It's a little island in the Hauraki Gulf. It's a 30-minute ferry ride from Auckland in New Zealand. Not many roads, not many cars either, just a place of great calm, peace and natural beauty. And it's quite fantastic. So we're delighted to have Justin with us. And we're so proud of what he's done. So today he's going to give us some new details of back testing to go on top of the work we know he's already done, and a summary of his research. And we greatly appreciate his generosity, as this is an immense body of work. Okay, so over to you, Justin, and you were kind enough to send me some charts earlier today, and this is the first one for you to speak to.
Okay, you can hear me good, John?
Yeah, wonderful this time. Thank you, Justin.
Okay. So, thanks for having me back on again, John. Since the last time I spoke on one of John's webinars, I've paper traded quite a few more markets, mostly in sectors that I haven't traded much in the past, such as bonds, currencies, indices, and maybe a couple of metals as well. And just like all of the results that I've shown in the past, the performances of these markets have been pretty much the same. So you can see here as an example, we've got 1 year's worth of results from the Japanese yen, as well as the micro NASDAQ. You've got the yen returning on initial margin 1,095%, which is pretty good. And that's a bit over $31,000.
Mate, just to put you in perspective on the pretty good, it's totally and utterly unheard of.
Yeah.
500% is unheard of. If you make 30% in a year, you'll be the hedge fund of the year. You'll get given presents and awards and be on television. So these numbers you're talking about are truly, truly sensational.
Yeah.
Sorry to interrupt. Back to you again.
No, you're right, John. Pretty good, 1,095%. I'd be pretty happy with that if I was getting that all the time. And below that, we've got the micro NASDAQ as well. That one returned 441% on initial margin, which comes in at around, I think it's $8,500 or just under. I've also included the equity curve for the NASDAQ as well. If you've seen the other webinars I've been on, you'll know that I like to show equity curves just because it helps visualize how a market performs across a period of time, and you can see what kind of ups and downs you need to be prepared to trade through. So it's just a really good way to visualize how things will go. And this NASDAQ curve, I would say, is pretty typical of a curve that you'd get by trading time. Some markets during some years will have flatter periods that they go through, and that can go on for a while. But time and time again, they tend to be followed up by strong bumps upwards as volatility comes back into the market. And I think it's almost like the market is trying to make up for lost time. You just see that pattern over and over again, and it shows up in all of the curves. So there's not really much new to report as far as results go. I mean, which is a good thing because it just means that this is consistent across the board. My average year is still returning around 600% or so, and I still haven't been able to find a market that is a true Danielcode killer. So far, it just seems to come out on top every time. I think I might be coming across a bad year every now and then, but then up it goes. It just depends on the volatility at the time, but it's always going up. It's just crazy. So we'll move on to the next slide now. And now that I've got a fairly large sample size of paper trading under my belt, I thought I'd just give a big picture feel of what the research looks like so far. So this is a list of all the markets that I've traded. There's 29 futures markets, all sectors covered, and there's 14 Forex markets in there as well, which I was really only looking at in the earlier stages just after I'd done a tutorial. Now I know for a fact that I've traded at least 2 years in each of the futures markets, and some markets like crude and gold maybe a few others. I've traded up to 6 or 7 years on those. So I haven't actually added it all up, but I think I am getting pretty close to 100 years all up. If not, I've probably passed it, I'm not sure, but it'd be around 100 years of paper trading. On to the next slide. This is just a basic summary of the results, just so you can get a big picture feel for it. The average return is, like I said, around 600% on initial margin, with the worst result being 150%. You remember that year I had in gold that John helped me improve on? That was it there. And the best one being 1601%. I think that might have been natural gas or crude oil, I'm not sure. My win rates, they generally fall between 45 and 60%, and there's markets that will get 45% win rates and make a heap of money. There's markets that will have a 60% win rate and make a modest amount. So there's no real correlation there between your performance. And my wins tend to be about 1.5 to 2.5 times the size of my losses. There's a few outside of that, but most of them fall within that range. And again, I need to point out, as John mentioned earlier, that I'm taking every signal on offer when I'm paper trading. And I'm a hard marker, as he said. But John will teach you in a tutorial how to decide when or when not to trade a particular market as volatility moves in and out. So there's always going to be the potential to get better results than what I'm showing here. And finally, 0 losing years. It's a bit ridiculous. I mean, I've never thought much of it until recently, until I've started saying it over and over again. I just thought it was normal, and I should be upset if I wasn't making 100% of return for every market that I traded. So, you know, the high standards that you get caught up in with the Danielcode, in reality, it's actually pretty incredible. I remember some programs that John was showing many years ago where he just had rows and rows and rows of markets on a spreadsheet and years of results to go with it. And the returns were amazing. They were crazy, but there were always some losing years scattered in amongst them. You just see these red dots here and there. And that was just an accepted part of the program. That was just how markets worked. There was nothing wrong with that. So I thought that those programs were the best thing I'd ever seen, but trading time is just taking it to a whole new level. I'm sure I'll find a losing year at some stage. I've got no doubt about that. But at this point, it really wouldn't make any difference because, you know, this type of trading has already proven to me how reliable it is. So apart from becoming completely comfortable with my trading for the first time since about, I think it was 2004 or 2005 when my dad first tried to get me into trading, there's plenty I've learned from putting in this type of work. But I'll just go through a small handful of points that might be helpful to others. So we'll move on to the next slide. A common question that I heard John was getting after my previous talks and the talks that Mark and others were giving was regarding win rates. Now, John has already spoken in the past about why a win rate around 50 or 60% is not only isn't a problem, but it's actually an important feature in being able to capture every turn and every big move. So I thought it might be helpful just to show a quick sequence of trades, just to help those with concerns visualize how trading time actually looks in reality. So just for simplicity's sake, I've used the first 20 trades off the bat from the micro NASDAQ results that I showed before. And just in fairness to John, I've removed the signals and entry prices and exit prices, so that's why you can see those blank columns there. Now, the first 20 trades that you can see, that's returning just under 100%. I think I've got 93% written there. So that's a pretty good start. But for most of the time, you can also see that just about every second trade is a loser. Yeah, so losses scattered through there everywhere. I mean, if you saw that and didn't see the cumulative results there, you might have thought that this was a bad run. But it's totally fine. It's actually pretty typical. In fact, I would call this a fairly decent run, to be honest. I mean, there's been times where I've had 5, 10, sometimes 15 wins in a row, and there's also been a couple of occasions where I've had more than 10 losses in a row. The big difference though is that the average wins are much bigger than the average losses. So when I've had 10 wins in a row, we're generally talking about hundreds and hundreds and hundreds of percent return and tens of thousands of dollars in the bank in a pretty short period of time. Whereas with losing streaks, 10 losses in a row or whatever, it always turns out to be a fairly manageable drawdown at worst. Sometimes it just turns out to be a flat period because the losses are so small. And the size of those drawdowns, they just pale into insignificance over the course of a year or two over a longer term. So they really don't mean much at all. And in addition to that, if you're trading more than one uncorrelated market, which John recommends, any drawdown you experience in any one particular market is almost always offset by the results of the other markets that you're trading. So a 50% win rate is absolutely nothing to be scared of, and I used to be scared about it, believe me. I think a lot of that just comes down to fear and baggage from past trading in my case. People like me who aren't seasoned traders or successful traders tend to come from a place where we want certainty in our trading, which is mostly an emotional response. Whereas if you look through the thousands and thousands of trades I've done, the rational response would be that 45 to 50 or 60% win rate isn't only safe, it's actually safer than a system with a high win rate due to the fact that you're able to pick up everything the markets are offering rather than taking on lots of little wins over and over again and making relatively small returns for the risk that you're putting on. So trading time means that you're always in the market and you're using Danielcode numbers and ratios to determine the highest probability of market turns, as well as the beginning and end of trends. So as a consequence of that, we've got to accept that due to the limitations of how we're actually able to interact with the markets on a daily basis and how we can place our orders, there's always going to be a few small misses here and there, or what I would probably better describe as false starts. There's also going to be periods where the market just isn't going anywhere for anyone, so no matter what type of trading you're doing. But on the flip side, you'll be able to capture a huge chunk of every major turn and every big trend. And one of the great things that you'll see with trading time is that you never miss the big moves. You're always picking up a really big chunk of it. And those wins more than cover the small losses that you pick up along the way. So you're basically extracting absolutely everything that the market is willing to give you. So 50% win rate isn't just acceptable, it's actually ideal, and it's an important feature. And that takes me to another point, which is that the more you paper trade before you start live trading, the more likely you'll be to be numb to any unhelpful habits or emotions. As you might remember me saying in previous webinars, I lost way too much money trading in the past, and I did it without seeing absolutely everything that the market could throw at me before risking real money. And I also didn't have a plan to deal with everything that the market was throwing at me. So just as a related story, when I was a teenager, I was really into flying, and I still am. And I went out and got my pilot's license. I actually did my first solo in a glider when I was 15, and after about 4 or 5 solo flights, I experienced what was my first real emergency of sorts. Just to put a long story short, I had a suspected issue with some critical instruments. And even though I was a pilot, I was actually a very nervous flyer in those days, and I had a healthy fear of what could go wrong in the air if I wasn't properly focused and prepared. But because I'd been trained extensively in all sorts of emergency situations beforehand with lots and lots and lots of repetition, I do remember feeling really numb to what was going on at the time, and my training just kicked in automatically. And before I knew it, I was back on the ground safe and sound before I really had a chance to think deeply about what was happening. So I think it's exactly the same thing with trading. I've done so many trades now with this system that I feel like I could do it with my eyes closed. I know exactly what the markets can do to me. I understand how volatility moves in and out of these markets. I know that the countless possible sequences of wins and losses just aren't that important to focus on. And I know that everything will be totally fine if I just follow John's rules and keep trading. All of the things that scared me about it in the past are not even an issue anymore. I just follow the rules, move on to the next trade, and there's always going to be hundreds and hundreds more trades to come. So I don't let any one result, whether it's good or bad, have an effect on me. So on to the next slide now. And this is my next point.
You finished with this
Trading,
slide?
yep, this is the one.
Good.
Trading multiple uncorrelated markets, I think, is pretty powerful, this type of trading. This is the curve that I showed the last webinar that I was on. You can see that diversifying your margin across multiple uncorrelated markets does a fantastic job of smoothing out your results. I mean, that's a fairly decent curve. I'd be happy to trade that all the time. This particular chart is made up of 7 markets, but I've done the same thing many times with just 2 markets, all the way up to 10 markets, and the results are always very similar. Even with 2 markets, a lot of the times I've just looked at 2 markets, and it's amazing how much the curve smooths out, especially if the markets are uncorrelated. So if you're still worried about win rates, still worried about flat periods, still worried about drawdowns, all the things I used to be worried about, then trading multiple markets on top of that is what's really going to settle those fears. It definitely helps strengthen your returns for sure by giving you more opportunities to catch volatility. But for me, I tend to think of it more as an extra layer of protection. It's just displayed that over and over again. Any kind of drawdowns that you might have seen in an individual market just get smoothed right out when you do this properly. And when you add some basic money management on top of that to compound your returns, it can get really ridiculous. If you remember that chart I showed last time, the returns that I got within a 2-year period were pretty unbelievable. And it's also important to remember that I did that very safely. No extra real risk was taken by doing that, and it was only possible because trading Danielcode time is such a safe, reliable, and high returning system on its own without any kind of outside optimization. So finally, on to my last point, this has all really opened my eyes to just how good John's approach to trading is. I mean, Danielcode time trading is a complete departure from the mainstream mindset and understanding about how markets work. I've totally changed my thinking about probabilities, about diversification, making predictions, simple concepts like support and resistance and trends and everything like that. It's just a completely different universe to what most of us originally started in. The fact that I get a little bit of steam coming out of my ears even now if a market only returns around 200% a year. That's a massive change from when just not losing was a huge achievement, because I'd always be losing. If I could ever sneak into profit, that was amazing. So this is a massive turnaround from that. And it's because I now know for a fact that no one trade is going to hurt me in any way, shape, or form, and that the markets aren't out to get me personally, like most traders tend to talk themselves into believing. The job is nothing more than to just execute John's rules as flawlessly as possible. If you can do that, then the markets will give you whatever they're prepared to give you, and over time you'll see these same types of results. So the final slide, just to wrap this up, the take-home message after thousands and thousands of paper trades that I've done, consistently high returns, 600%. That's been pretty standard the whole time I've done this. There's been no real fluctuation in that. It's been pretty stable. And like I said, that's without any compounding, without any extra help. So that's pretty amazing, and it's incredibly safe. Obviously, I've had no losing years so far. Pretty incredible to think about it after 100 odd years of trading. Um, it's easy and rules based. Once you learn how to do it, it's very, very quick and easy to get a hold of. It's not going to take up your whole day. You don't need to sit around watching charts. Very straightforward, very if this then do that kind of thing. Yeah, very good for people who are wide like me. It works on any type of market. Like I said, I looked at 14 Forex pairs as well, in addition to the 29 futures markets. It works exactly the same, no difference, no change in results, no funky stuff going on. It's all exactly the same. All the markets react exactly the same to it. And the final point, probably the most important one, is that this is going to be one of the most important skills that you'll have for you and your family for the rest of your life. You can see what these kind of results would do for you if you started doing this over the long term. It would make you pretty comfortable indeed. So I'm personally very grateful that John has decided to share this with all of us. He didn't have to, but yeah, very, very, very privileged. So that's it from me. Thanks for listening. Thanks for sticking around, and I hope that was helpful for some people. So I'll hand it back to John now.
Absolutely fabulous, my friend. I am so proud of you. This is a massive, massive amount of work. And, the depth you've gone to, the diversification you've had with your research here, pretty much is proving that this whole thing it's pretty buttoned up. It's hard to fault. I know probably deep down you've been waiting to find the market that would crack the Daniel code, and you haven't found it because it's not there. And that's absolutely wonderful. So I thank you so much again on behalf of all of our clients. They, I'm sure, understand how much work goes into what you're doing. So good luck, and I'll be talking to you in a couple of weeks anyway. And again, thank you for this wonderful, wonderful presentation, Justin.
No
Bye-bye
worries,
for
John.
now.
Thank you very much. Bye.
So, in that outstanding presentation by Justin, expose indeed, 600%. Amazing stuff, isn't it? 600% on margin. What does that really look like? Well, this is paper trading. So if we want to get a realistic assessment, you should take off 20% for slippage. Take off 20% for something else. Take off another 20% to cover your general lack of personal discipline. Or better than that, let's just cut the whole thing in half. Say, we know that 100 years of back testing has given us 600% as the standard return of almost all markets over a period of time. Let's just take 300%. That's half. Now, let's take this as an exercise. And what's triggered me with this is an article in the Australian today from a prominent US stockbroker who's found the secret, the quickest way to make $1 million. And he assures you that what you should do is take 7%, 8%, 10%, whatever you can afford of your salary, and put it into a managed fund, managed by him or his associates, no doubt. And that is going to make you rich beyond your wildest dreams, hopefully before you retire and need the money. Now, I know that's a lot of rubbish. Yes, basically the statement is true, but first of all, you're going to have to be young. It takes a long, long time to make any money. It does compound. And guess what? Markets actually go down instead of up. I know that'll be a frightening thought to you people. I'm talking about equities mainly now, because that's where your money finishes up going in almost all of the managed funds. Markets can go down. So it might be when you retire and need your money that this market's no longer in a bull phase. It might be in a bear market. That would give you a shock, wouldn't it? Basically, that just means handing over your future, your financial prosperity, your security to a complete stranger. And you're going to be following whatever he or they advise. I think that's a terrible thing to do with your life. I think that if you learned Danielcode time trading, you would be the master of your own future. And surely that is the purpose of life. So let's go on. Justin has showed us that the Daniel's Code has produced 600% across 100 years of various markets, and the range of them that he's shown and traded is quite staggering. Let's be conservative. Let's just take 300%. Now, those returns will be lumpy. Earnings in futures market are not in a straight line. They come and they go. They come and go with volatility, and volatility is like a wave. It comes and it recedes, and later it comes again. So let's take a theoretical exercise. 300% per annum means 100% or double your money every 4 months as an average. Okay. Now, I know you can't tell when that volatility is going to come, but over a period of time, it'll even out. In real trading, we're going to encounter slippage. All markets have limits of position availability at particular price points. Recently, I know the S&P E-mini was as small as 48 contracts per individual price point. That's part of why you get slippage. But as a basic assumption, you do need your available bank to be fully invested, not only for this exercise, but because we're rational people. We are not options traders, which is mainly guessing. We are not stocks traders, which is mainly follow the lead of being someone else. We are intelligent people using our brains to exercise our best ability. And the first thing you think of with using your brain is, of course, we'd want efficient money management. So I always say start with a small account. Let's start with a $10,000 account for this exercise. But I would always say to you, start small. As your account has doubled in size, then you can take more contracts. And that's the safest way to trade. But you're going to be trading in the biggest and most liquid market, so you're going to be excited about this, because think about doubling your bank every 4 months as an exercise, and that is what a 300% return implies. That means your 10,000 bank becomes 20,000 after 4 months, and 40,000 after 8 months, and 80,000 at the end of 12 months, or 1 year, not yar as I've got here, excuse my typo. Go to the second year, 160,000 in the next year becomes 80,000 becomes 160,000. The next rollover takes it to 320,000. The next rollover takes it to 640,000, effectively at the end of 24 months. The $1 million comes up the next cycle. That's real. That's close to attainable. Excuse me. And you are the master of your own destiny. Your fate and your family's fate and welfare is in your hands. And that's where you'd like it to be, isn't it? So make that decision, folks, and let me know. And I would love to teach you the Danielcode tutorial, the big one, the master class. And you've probably seen this before, but these are statements from two of our great super traders, both of whom are with us today. Mark L. Wonderfully, he said, I've said it before, I'll say it again. The Danielcode and John Needham have changed my life. And he's talking about creating and trading time signals. We also have this wonderful statement from Greg Palladini, who I've told you is a wealth manager, wonderful Danielcode supporter. And Greg is a most generous man. What he did when he came back to do his second tutorial with me, particularly to learn Danielcode time trading, he said, I'm going to post all of my experience up on forum for anyone to see. Forum's a page in the Danielcode website. And he did. And that was so incredibly generous of him. Wonderful thing, and I'm most grateful. And I do appreciate it. So do a lot of our members, Greg. I get a lot of comments about that. Thank you. So this creating and trading time signals. It's the big banger. Well, probably an unfortunate expression I use, but it has only been available through the Danielcode trading tutorial. And I really do urge you, if you are serious about becoming an elite trader, that's the most complete and the quickest way to get there. But now, with our new program, which I've announced, you can teach yourself to trade with our new video series at much, much lower price points. Email me, jneedham@thedanielcode.com, and I will look forward to making contact with you and teaching you the amazing marvels of trading time. I have to say, nobody is more thrilled about the Danielcode time trading signals than I am. And I've been doing this for over 30 years. It is a thing of great beauty, isn't it, guys? Those of you who know. Okay, this is something I want to talk to you about. I've been thinking about momentum during the week, and I'm thinking about what we talked about at our previous webinar briefly of put on a line joining the highest high of the last 3 days, the lowest low of the last 3 days, and you finish up with what the great late W.D. Gann called the tunnel through the air. And I've been thinking about momentum as an elastic envelope that expands and contracts, expands and contracts. And I started to do some analysis on it. And what I came up with here are these new momentum trade signals. And all of those black diamonds represent a place where this market had one of these momentum trade signals. And interestingly, there's not a lot of them after that initial great big move up. But every trade that turns into a trend, it starts with one of these momentum trade signals. Here's another view. This is the S&P. The previous chart was gold. And you can see over 147 trading days, excuse me, which is 6 months or so, there's not that many of them, but they certainly mark the start of all trends. So that's important stuff. As I say, to my eye, most of them appear to me to be a day late. Some of them are on time. Some of them are very good, but there's a few of them that are a little bit late. So how we can mesh this in with our general trading approach, I haven't yet finalized, but I will. And I think this can be a very, very useful adjunct to your trading. This is the zero balance that I've been talking about. This is a chart of crude oil, and you can see it's creating buy and sell signals, which to my eye come in late, a lot of them, but same thing. We know how to get every high for a sell and every low for a buy, because that's what Danielcode time trading teaches you. But we could tie it up and consider this zero balance on momentum, which is an entirely different analytical purpose. And whenever we can find something that the general trading public is not aware of, it's worthwhile and exciting. I just wanted to run through briefly what it is we trade, because we have a number of different programs. It can be confusing. Our TO3 trade signals, these are reversal signals, primarily based on price, but with a small added time trade input, which makes them exciting. That's what you've been looking at with me for years and years with these Danielcode webinars. I usually show you some of our better trades. Next to that's our TO3 plus signals. These are the same TO3 trade signals, but with trend continuation signals added. We move on from there to members charts. Actually very important. Find every price target for a range of futures and forex. Remember, the target recognition of these unique time and price levels are the most important final filter you can use. And we're talking about, when I say target recognition, we require the market to find those numbers within 0.1% variance. Not 1%, 1/10 of 1%. And that's very hard for markets to do. And so interestingly, when I started teaching and I was using charts back in teaching time trading, at least 2015, 2016, actually started teaching in 2004. But we were talking about that 0.1% in gold being 11 or 12 ticks. Now it's 3 times that or more. But the market's still finding these targets within 10 or 11 ticks. It is extraordinary stuff, and you would do yourself a great service by learning to understand that. We then move on to the fourth seal. Now, Lockie Cole, you asked to see Frank's wonderful forecasting of the fourth seal. I assume you meant on the S&P, and Frank DB is our star trader, and he runs the commentary and the charts for the Danielcode fourth seal. It's something I taught for the first time in 2011, and it was fortuitous enough that Frank had come to a Danielcode tutorial in Taupo, New Zealand. Beautiful place, a wonderful place to live. And that's the first time he'd ever seen anything to do with a financial chart or learned anything about trading. As he said to me, I know nothing about markets, but I love your writing. Would you teach me how to trade? So that's where it all started. Now, after all these years, he really dedicated himself to understanding the Danielcode forecasting model, and he has not only learned, he's created a lot of the technology that we now use. And is he a timing star? You bet he is. The best. How many analysts, hand on heart, around about January 2022, as the market was going down, said, oh, that's not the high. There are going to be higher highs. This is just a correction. The only one I know of was Frank, and he was adamant about it, and he's continued to be adamant about it. And you can read some of his commentary right here, and you can read that every week. He covers gold and the S&P and crude oil. As a success, this is a machine-driven model of daily trade signals for a range of future markets. And as I say, of course, you can learn how to create and trade the famous Danielcode time signals. This is the fourth seal from Frank. This is the last two postings that he's put up. And what he's saying is that this is not the top. It's got a little bit longer to go. And he's looking for that, the main projected inflection point early August. And he goes on to say, if it doesn't turn then, it can go into super mode, takeoff mode, in fact. So I'll give you a moment or two to read through this, but these are posted by Frank every Monday, and he's quite brilliant. I'm so proud of him. He's been a wonderful, wonderful student, and he has dominated, in my view, the world of technical analysis on important market turning points. Okay, so you want to be a trader? Here are 4 videos which I suggest you should read. I'll give you a moment or two to copy this down. Video 1 is Mark L. Telling us about his paper trading of natural gas in 2016. Video 2 is Amy and Scott from Boulder, Colorado. And Amy had never seen a financial chart in her life until she came to do her Danielcode masterclass tutorial. And Scott had done a bit of trading 12 years ago, but not much. And they're telling us how they made 500, 600% on margin with their paper trading after they'd done their Danielcode tutorial. Video 3 and video 4 are both from Justin, who has been such a star with his presentation to us today. Quite wonderful. And he starts to tell us, as he says, seeing is believing. 500% in 10 months seems impossible, but we did it. Wonderful stuff. I do really suggest, they're about 20 minutes each. I do suggest you take the time. It's important stuff for your understanding of this market and where it can take you. So that's all, folks. I've gone a bit over time, for which I apologize, but if you haven't already, do take your free trial. Go to the Danielcode website, www.thedanielcode.com. Just hit the register button on that website and follow it through. Any problems, contact Terry at support@thedanielcode.com. And finally, this is our disclaimer and our risk disclosure, which I like to show you all the time, and I suggest you take it seriously. I can assure you it is very, very easy to lose all of your money very quickly trading futures or Forex. The good news is, once you know how to trade and you can become a safe and profitable trader once you've been taught properly, it is very easy to make a lot of money trading futures and Forex. So do take my advice. Don't risk real money trading until you are at least convinced that you are a safe and competent trader, which does require a bit of knowledge. Okay, thanks for being with me, folks. It's wonderful to have you all here. I look forward to speaking to you in the future. In the meantime, one more day of trading for you this week. Have a pleasant weekend. Bye-bye for now.